Passive income generates earnings with minimal effort after the initial setup, standing apart from active income, which relies on consistent work. Examples include rental properties, dividends, savings interest, royalties, and revenue from businesses where direct involvement is limited. Benefits range from enhanced financial security and independence to flexible time management, freeing individuals from the constraints of traditional employment. Strategies include real estate investments like rental properties and real estate investment trusts for steady income without the need for active property management. Dividend investing in reliable stocks or ETFs yields regular payouts, while creating digital products can offer continuous revenue after setup. Peer-to-peer lending and crowdfunding provide additional paths to passive income, often requiring less capital. While passive income promises financial stability, it generally requires substantial initial investment, time, and research. Setting realistic expectations and understanding these initial demands are essential to building a sustainable foundation for long-term passive income.
So I suspect that we're going to hear this idea of trading our time for money and trying to buy that time back. Nick, can you kick us off? If you had to rebuild your passive income streams from scratch with just $10,000 to start, how would you do that?
Yeah, $10,000 isn't going to buy you a lot of passive income unless you're really going into a lot of leverage in a real estate deal. But what it can do is what we look at on the Side Hustle show is a lot of, we call them sweat equity type of passive income type of projects where you're building digital assets into terms of online content, digital products, YouTube videos. And I'm attracted to those types of models where it's something I can do the work once and get paid for it over and over again. For example, it takes the same amount of effort to create a podcast episode, in my case, that 10 people listen to, or 10,000 people listen to, or 100,000 people listen to, right? It's like looking for models with that type of scale, and digital products check that box too, where I create something once, sell it over and over again. Software is like the holy grail of that, but it's like becoming more and more complicated, or maybe less complicated with AI coded solutions. But that's kind of the path that I would be looking at, because it's like, okay, if I put that $10,000 into dividend investments, like, that's probably not going to be super exciting. You can start to stack it up, but you're probably better off putting that into some form of personal project where you can build something up over time and have that start to experience some time leveraged income for you. Maybe not completely passive, but you'll be on the path.
Thank you for that. Justin, what was your first passive income stream, and then how did it evolve into something bigger?
Yeah, my first passive income stream was actually mobile home parks. And that is, back then it was not common. It was, friends and mentors and people, they thought I was crazy that I was even talking about investing in the mobile home park, real estate asset class. It really wasn't even, its own asset class at that time, or it loosely was. But I found a deal that, when I started looking at the numbers and I compared it to everything else out there, I compared it to multifamily, self-storage, industrial, retail, land. You name it. I looked at, all the different places that I could put my capital. And I just saw pretty quickly that the returns were much greater with less work, and you could get lending pretty easily. So I could put 20% down. And in my case, my first two parks were on seller finance. So same owner. And that allowed me to just put 15% down because that's all he felt like he wanted. And so it was a non-recourse loan, meaning if anything went wrong, the guy I bought it from, he could just take it back versus coming after me and my other assets. But that single investment created enough in passive income that my wife was able to retire as a teacher. And that's when we started our family. And so we just kept buying parks. Our second park covered our survival income. Our third park covered our lifestyle income. And then from that point on, every additional park was just surplus income. And so the script gets flipped when you work your whole career, at least the early stages of your career, to save 10 or 15 or 20%. But once you're in surplus income and the money you make goes well beyond the cost of your living, well, now 100% can go towards building more wealth or impact projects.
Yeah, that progression is really impressive. And it sounds like there was a time when even you thought that there was a crazy idea, because I think I had heard that you thought it was crazy until a friend of yours was like buying a really big house. And you're like, wait a minute, maybe I should take a look at this again.
That's 100% accurate. Yeah, I was, I thought he asked if I wanted to go to a boot camp with him and learn how to do it and invest with him. And I was kind of like, I don't know. This doesn't sound like what I want to invest in. So why don't you go try it out and we'll see how it goes. And it went really well. And I ended up being his hard money lender because I was like, well, I'll just for sure get a guaranteed return and not invest in something that was, in my mind at that point in time, maybe risky. And now looking back, it wasn't risky at all, but back then it was. So I just took, a set 10%. And, but when I looked at the financials, I saw how amazing they were, and he was making a lot more. So I figured I should probably start owning and not just lending.
Lane, how about you? I mean, you transitioned from engineer to real estate investor. Can you talk a little bit about the mindset shift that you experienced to make that change?
Sorry about that. My kids are running around because that's the life these days. But yeah, like I graduated in 2009 and just started to work. And for the first decade, I just built my real estate portfolio as a side gig. I was working my engineering job. Didn't have very much time, so I didn't do any of the house flipping type of stuff. So it is possible to be passive, but it's gotten a lot harder, right? Like I started to buy these turnkey rentals that at the time I could buy for $80,000 with 20 grand down. So it took me about 6 months to save up for a down payment on those, and I just rinse, wash, repeat, did that again and again and again. But I'll tell you, it's harder for these younger guys these days. I mean, those $80,000 properties that I bought in 2012, 2015 are now going to be 120, 140,000. You need 30, 40 grand down payment on those things.
Yeah, prices are much higher now. If someone could just pick one strategy today, is there what's your advice to them for starting when you have properties that have appreciated so much?
Yeah, the way I break it down is like where you are in the wealth building journey, right? I mean, stage one, get a budget, be able to save $5,000, $20,000 per year. If you're not there yet, I don't think you're ready for any type of passive investing. You don't have enough firepower. But if you're able to save a decent amount, $10,000, $20,000, $30,000 a year, I think, to get to $500,000 net worth, start with little rental properties and then go from there. I think when as an accredited investor, $1 million net worth or greater, or $200,000, $250,000 income a year, the little rental properties are just not really scalable. So I think that's where syndications and private placements come in as an LP. But, as I break it down in my book, right, there's different paradigms of this wealth building journey. So different advices depending on where you are, what your net worth is.
Absolutely. Deacon, what are your thoughts? Because when you build a website, I think you don't need the upfront capital that you would buying real estate.
Yeah. So when I started my journey, our website was just a blog. So it was us sharing our story, paying off $52,000 debt in 18 months. And so it wasn't really like, I wasn't looking to make money with it. I was just looking to share what I had learned. But then I learned about, how do you get traffic to a blog? How do you monetize a blog through Google AdSense at the time? And then started slowly, making like 1,000, 2,000, 5,000, 10,000 plus per month. And the effort was minimal. Now, I will say the landscape for websites, at least, has changed dramatically, right? Kind of like what Lane was talking about with real estate. Real estate back in the day was cheap. It was easy to pencil deals. Back in the day, it was easy to start a website and to get traffic and to be able to make money with it. Now people have to be a little bit more creative in how they get their traffic from different social media sources like Facebook, Instagram, TikTok, etc. But yeah, it's definitely possible to create a digital asset like an online business, whether it's on a profile like Instagram, on a website, and to be able to make money with it and have some passive income from it.
Do you think that people need a lot of money to start if they're thinking about trying to generate a source of passive income?
Well, no, I mean, that's the beauty of doing an online business is it's very little capital to get started. It is a grind, as Nick would probably attest to, when you're saying, hey, I want to create a digital property and grow it. But if you use the skills that you have and the knowledge base that you have on that property when you have time off, right? At the nights, the weekends, maybe in the early mornings, you can easily start to build up that knowledge base and start to build a following. So yeah, the capital up front is low, but it does take time to start getting passive income from it.
Cool. Anybody else want to weigh in on the do you need money up front?
I'll say like my stuff, like real estate, you're gonna need like 20 grand to get started on a $100,000 house. So that's kind of where it starts from there. I think like what Deacon and Nick do, I mean, if you don't got too much money or, you know, your money is already deployed to real estate, I mean, I think that's how you make nothing out of into something. And at the end of the day, you got to put some sweat equity, make a website, buy a business, start a side hustle. I mean, you got the hardest part is getting that first 100 grand.
We
Yeah, I
see
think
some creative examples of people starting with lower capital amounts in like, okay, yeah, we want to own rental real estate down the road, but what can we start renting out earlier? I mean, we've seen people rent out their RVs. We've seen people rent out their backyard sheds. We've had people on the show renting out mobility scooters and portable hot tubs and photo booths, right? So you can think about other asset classes besides just, you know, bricks and sticks and real estate, apartment buildings and stuff. There's other things that you can get started with a much lower capital amount. We had a woman on who was renting out dresses. I was like, I never thought of dresses as an asset class, but there she was making 100 grand plus doing dress rentals.
Love the creativity.
I think there's
Justin-
always a way to be able to make money with no money. That's not the easiest way. It's always easier to make, or I shouldn't say always, it's usually easier to make money when you have money, but there's always someone that is going to be willing to, you know, either in let's just say in the world of real estate, do a no money down type of scenario. Most people won't. There's always someone that's going to be willing to do that. And I know a lot of people that have done it. And I probably could have done that a couple of times, but then there's also the raising money. So a lot of people, you know, once you're a little more seasoned, they want to know that you have skin in the game. But in the beginning, you probably can raise from friends and family and close network where, you know, it's other people's money. And if you have money, you can put it in, and it's ideal to have money in, I think, but I don't think you have to.
Love it. Let's go to segment 2.